You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 15th day of March, 2023. It's the Ides of March. Well, thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. This is our second live broadcast of the day. We do 2 live broadcasts every trading day. Now, the first live broadcast from 9:30 a.m. to 11:30 a.m. Eastern, that is reserved for members only and those who are taking their 1-week free trial. If you've never taken your 1-week free trial, go to mytradingiq.com and just click the button at the top of the page. The journey will begin. You'll receive instructions by email, and you'll be treated just like a lifetime member for 5 consecutive trading days. Doesn't matter what day you start. You start on a Monday, a Wednesday, even a Saturday or Sunday. You'll still get 5 consecutive trading days. Now, the morning broadcast, the live training room, private broadcast, ends at 11:30 a.m. Eastern. And after a 30-minute break, we come back for the afternoon broadcast at 12 noon Eastern. That would be this broadcast. Now, this broadcast is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast. The best way is to go to mytradingiq.com. Scroll down to where it says afternoon broadcast. Click the link. Complete the 30-second registration form, and you're done. Going forward, every trading day, about an hour before the broadcast starts, you'll receive an email. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform, where you will have access to the question box so that you can ask questions and participate in the discussion. Now, there will be days, of course, you're out of the office, away from the desktop, but you still want to join the afternoon broadcast live. Simply point your browser to our YouTube channel. It's easy to remember. You already know the youtube.com part. /CFRN. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every episode. Currently, there's over 2,200 daily live broadcasts archived for your educational and viewing pleasure. If you're new to the world of CFRN, it's a great way to get to know who we are, who we've been over the years, what we do, how we do it, even why we do it. You can scroll back 6 weeks, 6 months, a year, 2 years, even more, and just pick days at random and just listen in on a couple of days spread apart. I don't expect you to listen to all 2,200, and don't expect you to listen to old broadcasts talking about previous market conditions a year ago. But what you'll find, if you take the time, is a thread of connectivity, a thread of continuity woven through each and every daily broadcast. It is today overcast and raining here in the Valley of the Sun. So, California's had more rain than they've had in a very long time. The East Coast has had, and the Midwest, and even Arizona. We've had more rain in the past year than I've seen in the 40 years that I've dwelled in the desert. So, with all that said, so with the word of prayer, what we've been talking about the last week now, because Easter is just around the corner, we've been talking about the promise of forgiveness. Our scripture for the day, Matthew 26, verses 26 through 29. And I'm reading from the Message translation. During the meal, Jesus took and blessed the bread, broke it, and gave it to his disciples. Take, eat, this is my body. Taking the cup and thanking God, he gave it to them. Drink this, all of you. This is my blood, God's new covenant poured out for many people for the forgiveness of sins. I will not be drinking wine from this cup again until that new day when I'll drink with you in the kingdom of my Father. And again, it's Matthew 26, verses 26 through 29. We all hunger for reconciliation. The film Places in the Heart tells the story of Edna Spaulding, a mother of two whose husband, Royce, is accidentally killed by a boy named Wiley. Set in Texas in the 1930s, the final scene takes place in a church communion service. We watch as the bread and wine is passed to each person. In the front row sits Edna's sister, who's been in the process of divorcing her husband, but who now lovingly holds his hand. Next, we see Moses, an African-American man who's helped Edna with her farm. In that segregated area in the United States, it's a surprising sight. After Edna takes communion, we see something else shocking. She passes the bread and wine to her husband, who's alive again, and he then passes them to Wiley, his killer. Some viewers have burst into tears at that final scene because it portrays the reconciliation that we all hunger for. As Jesus explained, the communion bread represents his body and the wine his blood, broken and shed to reconcile us to God. Every time we remember Jesus in this way, we announce his death until he comes again. 1 Corinthians 1:26. And as that reconciliation is passed on to others, marriages are mended, races are united, and victims and killers become friends. One day, Christ will even reunite the living with the dead. Colossians 1:20. Each of us needs reconciliation with God and others, and such reconciliation is available because of what Jesus has done for us. So ask yourself, other than God, whom do you need reconciliation with? And how can Christ's sacrificial gifts guide you towards that reconciliation? Pray with me. Heavenly Father, thank you for your allowing your Son's body and blood to be broken and shed to reconcile each and every one of us to God and others. It's in Jesus' name we believe and pray. And everybody said amen. Amen. All right. Well, happy Wednesday. Not a lot out there to find to be happy about. The Dow right now is down 666 points. Yep, that's 666. Anyway, let me give you the numbers from around the world. Not a pretty picture. Probably heard the term blood in the streets, all that. Yeah. Well, here we are. One thing we know, though, is that over time, the indices always go higher. Now, we've been in a downtrend almost a year. But the way the indices are designed, like the S&P 500 is 500 large cap companies, the Dow 30 is 30 blue chip companies, Russell 2000, 2000 small cap companies. But when one of those companies begins to underperform, they are removed from the index and replaced with a company that is outperforming. So, yes, there will be sell-offs, there will be huge dips, there will even be recessions like 2008 and possibly 2023. But over time, every time the market has fallen hard, in our memory, the dot-com bubble, the real estate, mortgage-backed security blunder, look at how much higher we're trading today than we were then. I mean, the S&P actually hit 666. True story. Cash index. Today, however, the Dow is down 665 points, a little over 2%. Nasdaq's down 134 points, a little over 1%. S&P 500 down 67 points. That's 1.75%. And the Russell 2000 down 43 points. That's almost 2.5%. In the commodity basket, we had crude inventories today. Crude oil down $4.42, trading 66.93 last. It's a drop of over 6%. Gold bouncing back today, up $21, trading 19.3190 last. That's a gain of a little over 1%. Silver up 3 cents, trading 22.07 last. In the Asian markets at the close, Nikkei posted a gain of 7 points. Shanghai rose 18. The Hang Seng gained 291. That's 1.5%. And in the European markets at the close, FTSE down 248 points. That's 3.25%. The DAX down 415 points, 2.75%. The CAC down 221 points, just over 3%. So we had a green day in Asia. but it was a red day for the UK, and it's a big red Radio Wednesday here in the US of A. So what's driving all this? Well, there's so many things. Can't even begin to cover them all, but we know that there's a lot of concern over what happened with Silicon Valley Bank. Not only that it failed, but because current administration didn't want to appear to be doing a bank bailout like we saw 2008 recession. They bailed out customers, not the institution itself. So what happened with Silicon Valley Bank? Why did it fail? Well, according to the New York Times, the failure of Silicon Valley Bank was caused by a run on the bank. The company was not, at least until clients started rushing in for the exits, insolvent or even close to insolvent. Now, they actually wrote this and published it. But banking is an enterprise that relies as much on confidence as on cash, and if that runs out, game's over. The collapse may have been an unforced, self-inflicted error. The bank's management chose to sell $21 billion of bonds at a $1.8 billion loss. In large part, it appears because many of those bonds were yielding an average of only 1.79% at a time when interest rates had risen drastically and the bank was starting to look like an underperformer relative to its peers. Moody's was considering downgrading its rating. The bank's management, with the help of Goldman Sachs, its advisor, chose to raise new equity from the venture capital firm General Atlantic and also to sell a convertible bond public. Now, I could go on with what mainstream media is telling the world as they're continuing to tell the story, but here's something to think about. All publicly traded companies, banks or not, have what's called a board of directors. Those are supposed to be people experienced in the field of whatever the company is. It's a company that makes nuts and bolts, and people on the board of directors should have experience manufacturing, nuts and bolts. You get the idea. But when we take a look at the board of directors at SVB, out of the entire board, one person had experience in investment banking. One. Now, those of you who trade know what compliance is and compliance officers. No bank, no trading company, no one, even insurance companies don't operate without a compliance manager. For the last 9 months of SVB's existence, they had no one managing risk. Let me grab this real quick. I'm sorry to do that. Sorry about that. So, as I was saying, for the last 9 months of SVB's existence, they had no compliance manager. No one watching the store. No one watching the books. And the tech billionaires in Silicon Valley, they know how to read a balance sheet, for sure. They saw the writing on the wall. And so, yes, they did begin to withdraw their money because FDIC only insures each individual account up to $250,000. If you have more than that in your account, then you can open a second account in your spouse's name or one of your children's names, or talk to a licensed investment professional to tell you how to structure that so that you don't break any laws of any kind. But a married couple, they're obviously allowed to have 2 accounts, so that covers $500,000. But many of the investors, like Governor Newsom of California, SVB banked and backed several of his wineries, which are in a blind trust, but he certainly didn't want to lose his money. And so that may play very well into the hands of what President Biden chose to do. And there's still questions if he had the legal right to do that without it being put before Congress. So we're going to see a lot of news, a lot of talk about what happened, what could have been done different, and what the pending danger is to the economy, not only of the U.S., but the world. So there you have it. One board member with investment banking experience out of the entire board, and no compliance officer for 9 months prior to going under. How does that happen? I don't know. I can't answer that. So let's take a look at what I can answer. Logic 247. That's our 24/7 around-the-clock Emini alert service. Now, the markets have been so volatile. Perhaps the best position is no position. Since the markets opened Sunday night, we've issued a total of 18 alerts. Still waiting on 2. We had 16 actionable alerts so far. Nothing has stopped out. Over the last 241 weeks, we've issued over 13,600 individual handcrafted alerts. And we've averaged 20% or less being stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our passport holders in their unlimited one-on-one mentoring sessions. Never risk more than the potential profit in a trade. Now, let's say the potential profit in a trade or in an alert, maybe it's $1,000. But if your goal is to simply jump ship once you grab your 2 points, and there's nothing wrong with that, it's never a good idea to risk more than what you are attempting to gain from an individual trade. So keep that in mind. It's important. Logic alerts are based on current price action, but there's always time built in so that you have time to study the alert, study the 30-minute chart, see the window of opportunity that's represented, so that over time, you learn to see the windows of opportunity yourself. Our goal is for you to become self-sufficient. You don't want to spend the rest of your life depending upon somebody else to tell you when to get in and when to get out. You want to be able to look at the chart, the indicators, look at the weekly trading zones, and make your own decisions based upon market structure. Now, Concierge Trade Alerts, that's our original alert service. They're posted shortly after the Globex Open each evening. Last night, 10 minutes after the open, our members and trial members received all of these numbers. Now, because this broadcast is open to the public, if you are not a member or on a trial and you didn't get these numbers last night, feel free to grab a screenshot. So, now, what do you do when the numbers come out? First thing you do, we'll use the ES as an example, you make note of where price is at this time. And draw a line in the sand at the long target, a line in the sand at the short target. Serve as great visual cues on your 30-minute chart to help you stay on the right side of the street. You don't want to be selling a market that's trending higher or buying a market that's trending lower. If price gets above the 30-minute BBC, that means it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's kind of that simple. Always look left. Spot potential obstacles, support or resistance, depending upon whether you're trading long or short. And over time, you'll learn how price behaves at a weekly trading zone. Price is always trying to reach a weekly zone. Resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal of the day. Now, current market conditions are extremely volatile. So those smaller stops that you've used in the past just may not be working out for you now. Okay? So you're going to have to reassess whether you even want to trade, and if so, how much more are you willing to risk? However, cardinal rule says you can't risk more than the potential profit in the trade. Sometimes when these storms come, just got to weather them. All right, let's look real quick at the daily chart. Michael will be along in about 10 minutes, and he'll give us a recap of what happened in the live training room. And then we'll attempt to stream live again on TradingView today, as we do every day at 1 p.m. Eastern. Okay, as I said earlier, we've been in a downtrend almost a year now. The low of the downtrend was put in October 13th. The bounce that came out of that put in a high February 2nd. You draw your fibs from the low to the high. And it was here that we started talking about a deeper move to the downside, possibly back to challenge this October 13th low, and then a continuation of the downtrend. As you can see, the pullback to the VVC holds more often than not. That's true on a daily chart, 30-minute chart, 5-minute chart. It also applies to every market. Futures, individual stocks, crypto, forex. Institutions move price. Institutional traders are watching daily, weekly, and monthly charts the way you and I watch 30-minute charts, 5-minute charts, tick charts, and range charts. Remember, their accounts are denominated in hundreds of millions and billions of dollars, whereas the typical retail trader has an account denominated in the thousands or tens of thousands of dollars. So by looking at the daily chart of whatever market or stock or crypto or forex pair you trade, you're able to see what the deep pockets are up to. Now, anytime price gets above the BBC, that's the green line. BBC just means bull bear cross. Price crosses below, we're bearish, anticipating lower prices. Prices above, we're bullish, anticipating higher prices. When blue and climbing here, after we put in this high, blue and climbing turned to red and falling. That's the day we started talking about this. Now we've dropped to the 38% fib retracement. Twice, the third time we sliced through it. We found support 1, 2, 3 days in a row at the 50% fib retracement. Fibs are not proprietary. It's 14th century math. So do institutional traders have fibs on their daily, weekly, and monthly charts? Of course they do. They can sometimes become meaningless on smaller time frames, but feel free to use them if they help you on smaller time. Sometimes it's just part of the noise. So what do we know? We had a rally yesterday. Where did the market find resistance? At red and falling. This indicator is called the CFMA1. I refer to it as blue and climbing, red and falling. One bullish, the other bearish. So as price raced up yesterday, literally to the tick, we hit red and falling, resistance. We closed off the high of the day. We opened last night, we spiked it a wee bit, and now we're back below that 50% fib retracement. The next logical place for the market to find potential support would be the low of March 13th at 38.39 and a quarter. Then we're to the 62 fib retracement. And then the low of November 3rd, the low of October 21st, the low of October 14th, and then the number we already talked about, October 13th. So by looking at the daily chart for just a couple minutes before you begin trading, you can see which way the deep pockets money is trading. Or as I say, which way the wind's blowing. Okay? We got a big red candle, we got red and falling overhead. We're below the BBC. Quite a wall of worry the market would have to climb to rally from this point. Your first level of support is at the low of the session. We're off the low of the session. Okay? But even in downtrends, there's pullbacks. In uptrends, there's pullbacks. Leg, retrace, leg, retrace, leg, retrace, leg. And when price can go no higher, it will turn right around and start creating legs in the opposite direction. Until the price gets so low, so irresistibly low, the buyers come in, drive it back up, typically to the BBC, pullback holds more often than not. Okay, keep that in mind. On the ES, here's where the market opened last night. The vertical line separates today, Wednesday, from yesterday, Tuesday. This was the opening candle last night. 10 minutes into this candle, the CTA numbers were issued. Now, I talked about drawing lines in the sand. 39.84, 39.08, 39.84, 39.08. Okay, so you could have drawn those lines in the sand at 610. Now, price was above the BBC and even got above the weekly trading zone. However, it was not able to take out the high of yesterday. So blue and climbing turns to red and falling. Get a bearish cross. Price gets below the BBC. It's down to the zone. Catches a little bounce. Hits the short target. Continues down to the next weekly trading zone at 63/64. So this candle was actually 65. So we missed it by a point. Now the zones are issued Monday morning at 6:15 a.m. Eastern to all of our members and trial members. We've published the zone since December 14th of 2009. And price drops to a zone, we expect support. Price rallies up to a zone, we expect resistance. And that process has repeated itself over and over, again and again, day after day, since the first day we published the zones for our members back in 2009. We've got blue and climbing here. We've got a red body on this candle. Price is trapped between the step line and blue and climbing. If we take out the previous 30-minute low, then that should take us on down to the zone right below us at 3863/64. The Dow, again, we opened above the BBC, but we were unable to take out yesterday's high. Yesterday's high, see where resistance was, right at the zone. And so once blue and climbing turned to red and falling, right here, price closes below. This candle takes you right down to the target, then down to the zone where we catch a bounce, and then a continuation down to the zone. Notice red and falling has turned to blue and climbing. Step line has crossed. That tells us the market may attempt to pull back to the BBC. The selling pressure is so great today, it may be that we blow through this weekly zone, and the next weekly zone below is at 37.20. On the Russell, here's where we opened last night. Climbing, turned to red and falling. Down we go to the target, end of the zone. At the zone, we catch a bounce right here. We drop, pull back to the zone where we find resistance, 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 resistance. And then at blue and climbing, we anticipate support. So we got a little support here when we hit it, bounced up here. But now it looks like price. You take out this low at 1730.70, and you've got a window of opportunity down to the zone below at 1722/23. Got to let that low get taken out first. On the NQ, here's where we opened last night. It's consolidated along the weekly zone. Only three things happen at a zone: consolidation 70% of the time, rejection 20% of the time, the slice 10% of the time. Slice through this zone. When that happens, price will typically retrace to the zone it sliced through and then continue in the direction of the slice. That's exactly what happened. Now we're sitting on top of blue and climbing. Will it hold or not? Time will tell. Crude oil, huge down day. Here's where we opened. Pull back to the BBC. Blue and climbing turns to red and falling. That candle right there speaks volumes. As we start to drop, it takes us all the way down to the short target, and we're already below the lowest weekly trading zone for crude this week. Gold, on the other hand, opened here at the weekly zone, dropped to the target, dropped to the zone below, almost made it to the next zone, got above the BBC, and when you see this, price, step line, blue and climbing, BBC, that's the recipe for an up move, okay? And that's what we got, right up to CTA long target. Price is always trying to get to a weekly zone. From the moment the markets open Sunday night till they close Friday afternoon at 5 p.m. Eastern. If price is above the 30-minute BBC, it's trying to get to the zone above. Price is below the 30-minute BBC, it's trying to get to the zone below. Silver, kind of a quiet day after yesterday. Sideways overnight mostly. Then red and falling turns to blue and climbing. We get back above the BBC. A 2-penny move is worth $100. The high of the session on silver, $22.52. A $1 move in the price of silver is worth $5,000 per contract traded. $1 move in crude is worth $1,000 per contract traded. And a $1 move in the price of gold is worth $100 per contract traded. Is that you, Michael?
I am here.
Okay.
Yep.
On the euro, we ran up to the long target. Going climbing, turned to red and falling. We got below the 30-minute BVC, and we just kept dropping. And when I gave you the numbers from around the world, it was a huge red day in the UK, just as it's a huge red day in the US of A. So that takes us back to our daily chart. We're off the low of the session, but we're below the 50% fib retracement on the October 13th low. The high, February 2nd. Institutional traders see this. Not a lot of confidence out there. Michael, if you're ready.
Okay. All right. I am ready. Let me do this. Bring it over here. Do this and that.
We were discussing SVB, Silicon Valley Bank that failed at the beginning of the broadcast. On their board of directors, guess how many of them had investment banking experience? Just guess.
I'm going to say none.
Okay, you're close.
I'm just going to guess.
One.
And
they've, and I don't know how this got past regulators, but they've not had a compliance officer for the last 9 months. Yeah.
And how many of those people on the board actually sold out a ton right before
Quite a few.
everything went wrong?
The long paper they had invested people's money in. As the Fed raises interest rates, that paper becomes worth less and less. And, yep. But the good news is all the billionaires got saved. Billionaires got bailed out.
Yeah.
So.
Yeah, that's good news. That's the good news. Yeah, all the little guys. Well, I mean, they're on the bottom of the food chain.
Yeah, I can see your chart, so I know you need to get going. Okay.
Yeah, okay, that's right. It's 12:46. All right, so here we go. Good afternoon, everyone. Today is Wednesday, right? Wednesday, the 15th day of March, 2023. Now, if you've not taken a free trial lesson, you want to, go here to mytradingiq.com. Here's a sign-up fee, free 5-day training, 9:30 to 11:30. Click on that. They have a little form to fill out. It really is a little form. It takes you a couple seconds. Mouse clicks, you'll be all done. When you do that, you should download the trading platform, okay? In here, there are 3 different trading platforms you can download. There's GT Pro, which you're probably going to see a little bit of right now. There's TradingView, which you're going to see a lot of. And there's NinjaTrader, which you're probably not going to see any of right now since I don't have it open. You can download either one of those platforms, all of those platforms, 2 of those platforms, but I'm going to suggest at least downloading the TradingView platform. That's the easiest. It's not actually a platform that you download. You just have to sign up for it. And then we have to enable your indicators. You don't actually download anything because it's browser-based. That's the easiest one for us to get you into and to get you up to speed with. If you do download the platform, you should probably go here to Trade Rules. If you do the TradingView one, it's right here at the top. Read all those instructions for setting it up. And if you do either of the other ones, these are the trade rules for the other ones, okay? With the TradingView one, this is the setup, and right in here, this is a setup video. This right here is a link to this right here. If I hit save on that right now, like that, then this link right here has what I just saved. Okay, so you have access to this exactly as it is right now. These are no trade zones, these pink areas right here. But that's how you take the free trial, okay? You should definitely download the trading platform. If you're going to bother taking the free trial, you should definitely get in there and download the trading platform, okay? Let me scroll up here a little bit just to see who all is in here. Okay. So the spreadsheet, if you're going to read the spreadsheet, you got to read all CFTC risk disclosures down at the bottom. I made a few mistakes today, and that's what got us to this number instead of some better number. I also didn't trade. I placed like one trade on the NQ, and I didn't trade crude oil today. But today's 15th day of March, 2023, made 0 on the NQ, 51 on the YM, 0 on crude, 25 on the gold, and we lost 12 ticks on the ES. That put us at plus 355 in the morning session. Today took 8 minutes and 3 trades to get to $600. That's not per contract, that's just $600 profit. And took a total of 24 trades this morning. So on the month now we're at $8,780. That's over 11 trading days, averaging $798 per contract per 2-hour trading day. On the year, we've gotten our goal for the day on 49 out of 50 days, and we've gone 19 business days since our last blue day, 397 business days since our last red day, and we are at $23,580 per contract per 2-hour business day on the year. That averages out to $471. If you were to quit trading when you get your goal for the day, that is right here. Okay, that's really where you want to be. Don't add contracts, don't add trades. Get in there, get out. Get in there, get your money, and get out, and don't risk anything else. That's where you want to be. So if you did that like I did, and this is what I did actually do, I worked 12.18 hours getting my goal so far this year, and I averaged $956 per hour while I did that. Right, it's actually a little better than that, but it should be $1,004 if I'd done everything right last month, but I messed up 5 days last month. All right, that's it. Let's get into the trades. Right, so we have plenty of time. We do have plenty of time. We have 11 minutes. 11 minutes before I start the next session. So in gold today, we had just a few trades. It triggered a lot of trades, but the markets were, let me just do this, control, and little arrow over. Okay, here's where it started for us in gold. And this was in the pre-market. I took both of these trades with one contract, so I counted them toward the total, but I didn't count them toward the goal for the day because I want to do the goal for the day with 3 contracts on. So this first one here, we got 8 ticks, I think, and then the next one we had 13 ticks. That got us to 21. And then we didn't trade it again for a little while. It did trigger some trades in here. Remember, if you get into a situation kind of like this in here where the trade that you're in doesn't continue the trend, then the trade after that you may want to be careful about taking. Like in here, this did actually continue the trend. You wouldn't have to take that one because you've still been in it from there. Then it pulls up, and this barely continued the trend, but you would have been hesitant about taking that one, and then definitely not taking that one. So it would have kept you out of those 2 trades right there. Anyway, one of the little nuances. I took a break-even trade here, and at this point, we took another trade right here, and that was for 4 ticks. We were at plus 25 at that point, and I believe that is where we stopped. There were some more trades in here, decent trades, and we had to wait for the long-term trend to get bullish, and then just look for the opportunities. Showing down here in the slingshot, and this was really, really flat here. It was hard to watch right here, but we did watch it the whole time, all the way through there. We were just watching carefully and waiting for it to give us something that was worthwhile, and it just kept not doing it. And during the break, we had one trade here that would have given a little bit of profit. It did put in a little bit higher swing, so you could have taken that one, which was a nice trade. One trade here gave a little bit more profit, just enough to break even. It did put in a higher swing, so you could have taken that, which was okay. This one here would have stopped out, so you wouldn't have taken that one. And that was it. Okay, you guys get what I'm talking about here when I say this needs to put in a higher swing. If it didn't, then you had no confirmation of trend. Okay. Anyway, that was what happened with gold. Now, I didn't look at crude at all today, but I did trade the Dow. Crude was in a huge downtrend this morning, but it was still, there was a delay between the actual market and my DOMs, so I didn't do anything with it. Oops, I can do the arrow thing again. Thank you, 4K. Who told me about this? All right. So here is the YM, and this is all in the pre-market right here. We didn't do anything through here in the pre-market. Okay, we finally started to trade in here. I ended up with a break even on this and plus 1 tick on this. This was actually this one right here, the bar. One. Plus 1 tick on that. You can see there were more trades that followed up here, but I didn't do. And I didn't do anything in a while. Then we got another one over here. And we got 3 more ticks on that to get us to plus 4, and then 5 more ticks to get us to plus 9. And I was going really slow at the end. I mean, with the YM. Break even there, then went from plus 9 to plus 14. So we had another 5 tick, and then went from plus 14 to plus 16. So we had a 2 tick. Then finally we had a good trade. Well, we had a break even there. There were a few trades in here that triggered, but we didn't do. And we finally had a big trade here. We went from 16 to 40. So that was a 24 tick trade. 24 ticks on that trade. And then our next trade, we went from 40 to 44. So we had 4 ticks. Oops. There, then 2 ticks here on the next one after that. And then we stopped out. Somewhere in here we stopped out. It doesn't look like I put that in there. We went from 40 to 44 to 46 and went to 66. So in here was like a 20 tick trade, get us to 66. Oh, I did put the stop out in. Okay, we went from right here to 66, and then we stopped out, and that put us down to 51 right there. Okay, so there's a small trade in here that's missing. We went from 44 to 46, and then on this one we had a decent trade, 20 ticks. And from 46 to 66, then we stopped out, minus 15 ticks. And that was where we ended the trading on the YM. You can see as it got choppy in here, there were a whole bunch of like break-even looking trades in here. The first one in here, it might have stopped you out right here, but then you wouldn't have taken any more of these trades until you get over here, and that might have stopped you out too. Okay, and then you get it back here on that one, and not that one. You wouldn't have taken that. Actually, you could have taken that. Yeah, so that was okay, but you wouldn't have taken that. And then in here, those have been combined into one trade. Good, good, good. And this one also good. So all those trades have been okay. And I didn't take any more, but these are all the trades that triggered during that time period. You can see right in here, when the ribbon is starting here and it's spread open like this, and it just opens up nice and wide, and you can get into all those trades on the way down. You know, the way the market's going, down and up, down and up, down and up. These right here, when the ribbon opens up and you get in on these first couple of trades, those are usually the best ones when you have a decent trend like this. See, the ribbon's opened up, you have that there, this continues down over here. That's all good stuff. You want to get in on those. Then this one right here, you finally got one that didn't put it in a lower swing. So you wait, you don't do anything. Right here, it was too flat to go long. So you wouldn't do anything, and then it starts going back down right over here. Down and up and down, I think, anyway. I think, let's see. Yeah, there was another down and then some more up. It turned around, started to give a long trade in here, gave one right here, give another one here that would have stopped. This would have been a short that would have stopped. Okay, gave a long trade here that would have been okay. I don't think I would have taken that one, and this would have been good right here, this last one. Okay, that was the YM. So there was a lot of activity on the YM today. This is the ES. Now on the ES, you see I have the no trade zones on there. There were a lot of no trade zones today. A lot of no trade zones. So I'm going to hit this button and this button to get back to the beginning. See all those arrows and all those no trade zones. Now I'm going to take the no trade zones off in here right now because I was putting those on at the end of the session just to illustrate why we were not getting any arrows toward the end. And if I had them on in the beginning, then I had them on correctly. I had the sensitivity accidentally set to the wrong thing this morning when I started out with the ES. So that's something you guys are going to have to be careful of. I had it set to 0.01. It's supposed to be set to 0.35. So it was giving me a lot more arrows than I probably should have gotten. Our first trade on the ES was right here. I ended up with a break even, and this 20 ticks. This is where we got the goal. I had 3 contracts on right there and picked up 20 ticks. It actually gave me some slippage. I ended up with like 21 and a half all told between the 3 contracts. But our next trade was here. I stopped out this was a mistake. I should have had my stop at break even. I had a horrible entry and I stopped out on it. And then over here, this was a mistake. And then this was a mistake. All right, so this one I should have had my stop at break even and I didn't. This one, my entry was like up here at the top of this bar. So I should have my stop at break even. I didn't. It didn't put in a higher swing and I took this one anyway. And then that one stopped me out. I didn't move my stop fast enough. So all three of these trades right here, I should have been break even at least. And should have only taken 2 trades and had 2 break even trades. But I took 3 trades and I stopped out on all 3 of them. So that's minus 36. I'm sorry, minus 30 ticks altogether. And that is the difference between minus 12 and plus 18. Anyway, so right here, we had a nice trade right here after we stopped out. Now we started out with a plus 20, then we hit a minus 10. That put us down to 10. Then we had another minus 10. That put us down to 0. Then we had another minus 10. That put us to minus 10. And then I got plus 4 here. That put me to minus 6. And then another plus 4 here. That put me to minus 2. And then I didn't do anything with it for a little while. We got into the training and I stopped trading it for a little while. I had something here that didn't count. And then this one right here, this was another mistake. I was bringing my Damo to move my stop to break even. And I had my original minus 10 tick stop still on. I didn't move fast enough. And when it hit here, this was like a 1 second move, even faster than a second. It went from here straight down here, hit my stop, and then it started going right back up. So that was another mistake. All 4 trades that I stopped out on the ES were mistakes. And I forgot to count that. So after this one, we're at minus 12. I'm not counting whatever that was. And it probably wasn't very much, 1 or 2 ticks maybe. And that was my morning with the ES. It was a difficult morning with the ES. Okay, and I didn't trade anything on the NQ. I just noticed that we're at 12:59. Now we're at 1 o'clock. So let me hit the start button on this over here. Okay, let me hit that, this, and hit refresh. Again, hit this. Let's see if it lets me do it. Nope, it's not letting me do it. There it goes. Okay, so I'll start that, and then I'll hit start stream. All right, so if you guys have not taken a free trial with us and you want to, go to mytradingiq.com and you can take it there. Okay, so we're starting the live stream right now on TradingView. I showed you guys how to get to live stream in TradingView. If you don't know how, you go here to tradingview.com and scroll down to upcoming streams. It's right here. Well, now we're going to be at the top in live streams right now, is where we're going to be right now. All right, so right now the NQ, which I only took 1 trade on to break even, is going really flat. It's right here. Now the problem I had with the NQ today was that it was it had a spread in it most of the time, most of the day, so it was all over the place with the DOM, and I really did not want to get involved with it, so I didn't for the most part. All these markets right now are kind of flat. Only thing that's not right here is the ES, and it's already given a short. It's already gone too far into profit to want to put the trade on now, so we're just going to have to wait. See, the long-term direction is this line right here, right here. This is your long-term direction. So this is bearish long-term direction. This is flat, and this is just a little bit bearish over here. But what we're looking at now is, you see these pink lines here. That means that's a no trade zone, right? The no trade zone is part of the TIQ context. I'm going to turn it off for right now, but it's just if you're not understanding why you're not getting arrows, it's because it's in a no trade zone. What the no trade zone, what that does is it looks at the slope, the long-term direction, and it says if you don't have any slope, then you don't want to be trading, right? That's basically what it says in a nutshell. So we don't really have any trades anywhere right now, so we're just gonna have to wait. This morning we had a pretty slow day in the room. I made a bunch of mistakes on the ES. I made 4 mistakes on the ES, and I put minus 12 ticks on the ES overall. I mean, we ended up with plus 25 on gold and plus 51 on the M. We were break even on the NQ. As I said, I only took 1 break even trade on the NQ, and I didn't trade crude oil all day. It's a few days in a row I haven't traded crude, and it's because it's either been not active at all or it's been too active. And either way, it was not looking good on my DOM. So right now we just have to wait a minute. And what I want to see over here on the ES is a lower swing in place. Put in a lower swing and I'll consider taking follow-up trades on that. I want to see the NQ in a depth. Actually choose a direction. Same thing with gold. All right. Nothing on the screen. Bill, everything is showing like it's on the screen from my end. I don't know if you have to refresh your screen. Yeah, refresh your browser. Okay. And if anybody wants to see any equities, those or Forex or anything like that, you just got to type in the symbol, or any ETF or anything like that. Just type in the symbol and I'll be happy to take a look at it with you. Okay, so right now everything's starting out pretty slow. What I'd like to see here, we're starting to get some movement here on the NQ. We're starting to get some movement here on the trigger was actually meeting right here on the ES, and I want to see it put in a lower swing before we jump on that. It'd be nice to see the NQ get down a little lower too before we jump on anything there. We're just not there yet. Let me shut that off, and I want to see the ES get down below this level. I don't think it's going to. The NQ right now is in the overbought position there, so that's actually a selling opportunity on the NQ. It's kind of tough to say what it's going to do right here. Hang on, something just happened, and I'm not sure what exactly. My whole stream just went blank again. Okay, so there's no reason for my stream to have gone blank, and I'm not seeing it on this end. I'm going to hit refresh right here again, Dwayne, on my side. I'm going to hit reload and see if that does anything. Because Dwayne, can you see my screens on the stream? Because right now it's showing no screen on my side. So let me shut that off and turn it back on. Okay. Yeah. Okay. For some reason, it's not showing on my end, but I just shut it off and turned it back on, and so everything will be okay here. All right. Now, we just had a little bit of a move down, a little bit of a head fake to the downside, and now everything's starting to move up. So as long as you can see everything, then I'm just going to keep going, because from my end, it doesn't look like you can. The NQ on an up close here, we want to see the lead line get out of the oversold, and if it does, that's going to give us a long trade on the up close. All right, we want to see that get out of the oversold. It's not there yet. Not there yet, and it's not there yet. There it is. That's the long trade on the NQ, and here it is, and stop to break even on that, and stop to plus whatever that is, 16, I think that was. Okay, and there's not another trade here right now, but that first one was plus 16. Let me put a thing on that one. All right, now I'd really like to see that go up and put in a higher swing before we get another trade there. Oops, that's gonna be a blue one. Okay, the ES gave a trade at the same time right here. Now I'm not in the ES trade, but it's not too late actually to get into it. Because I haven't gone 4 ticks into profit yet. Okay, the YM gave a trade at the same time right here too. That one did go 4 ticks into profit. That one, it's on a 10 tick range. The YM is on a 10 tick range. So the YM's got to go 6 ticks into profit to bump the stop to break even, but it already did do all that. The ES, however, is now at 4 tick spot where you can bump the stop to break even. I'm going to lock in just 1 tick on the ES. It should make it all the way up here to 85, 38.85, and it took me out with 1 tick. Okay, watch the NQ for another possible trade over here. We didn't put in the higher swing, so this is a little less appealing to me. I ended up with just 1 tick over here on the ES here. It was actually the bar before that, I think. But anyway, let me write this down. Okay. Okay, and the NQ is actually got another one. Again, it's a little less appealing because we didn't put in a higher swing right here. Right, same thing with the ES. It's just not that appealing. What you want to see whenever you get a trade, you want to see it continue the trend. All right. This is the way it works. It goes up, and then down. And then it should go up, exceed the prior swing high, and then come down, and then give you more up like that. This one right here didn't do that. It went up, it came down, it went up, did not exceed the prior swing high, then it went down, and now it's going down, and it's probably gonna go like that. Okay, so I'm gonna stay away from it right now and give it a little room to breathe here. And same thing with the ES. That's great. Okay. Well, it says it's still on my side, so I'm going to hit refresh on my side and see if it does anything. I don't know. I don't know. I mean, we're only 8 minutes into it this time. Okay, I just hit refresh. Now it looks like it's reconnecting. It's reconnected. And it's not showing my screen yet, but I don't know if the audio is back on. It says it's live. Oh, it says my screen is off. Here we go. Do it again. There, it should be back now. There it is. Okay, I can hear the delay. All right. So now I can see it's showing it's back on here on my side now. So I don't know. Yeah, it's just, okay. So Bullberry should see, everything should be back up for you. You just should see it again now. Ken, you're not going to, in the GoToWebinar, you're not going to lose it. That's just whatever they're using on TradingView, in the live stream TradingView. That's what keeps going off. The gold over here just had a short. I'm not in it, but it had a short right in here. We're not really running on a higher swing here on the Dow. Okay, so you're not going to have a trade here until it gets down into the ribbon. I'd really like to see it put in a higher swing before it gives us anything else. Same thing with the ES and the NQ. But so far, we're still at the same thing where we were at, a few minutes ago. And now it's saying that we are 9.5 minutes into this live stream session. So it's probably going to have recorded all the things that you went wrong. So I would think that they could just go and look at it and maybe figure out what went wrong. But I don't think it's on my side this time. Anyway, we need this to put in a higher swing. Right here, the long-term direction here on the Q is flat. Right? It's not flat here on the ES, but it didn't pull down into the ribbon. We did get a higher swing here. We got a higher swing here on the YM too. Now, as they both pull out of this overbought, they need to get down into the oversold or get into the ribbon, one or the other. Nothing is doing that right now. The move up is just a little too strong. This is still right at the midpoint of the weekly trading zones. That's what the ES has been hovering around all morning. Okay, so we're gonna need we're 11 minutes in right now. We're gonna need a deeper pullback on the YM, on the ES, and on the NQ. Now the NQ all down into the oversold. You might get a trade on all of them right now coming up. Okay, you might get a trade on all of them coming up. Hang on. Yeah. Here it comes. There it is. I think it's coming up here. All right. Sorry. I was watching the ES, looking for the trade on the ES, and I don't see that. And we did get down to the oversold on all three of these. So we're now looking for a run up right here. I missed it here on the NQ. Hang on. Okay, I just grabbed it on the YM. I missed it on the NQ, and I missed it on the ES. I can't believe I missed it on the ES. But on the YM, I'm back in. That's 14, 16, 19, 20. And we'll see where it's going. But you see all those trades right there. I missed the NQ, I missed the ES, but I got 20 ticks on the YM. It's right in here. Okay, the ES was right here. The NQ, there were a couple of them. There was one right here, and then another one followed up right there. The NQ is giving you another look right now. The ES is not yet. We're looking for a deeper pullback here, and look what happened with gold. We had that one trade over there on gold. I was still trying to figure out what was going on. I was still trying to figure out what was going on with the live stream, and I missed that beautiful trade right there. But anyway, let me write down the YM one. 1YM. So I'm not getting too many trades off today, but we're only halfway through so far. And up close right there on the ES is going to be a trade. I just went long the ES. Here it is. And that's got 10 ticks risk. Every trade starts out with 10 ticks of risk if you have a 7-tick range bar. If you have a 10-tick range bar, every trade starts out with 15 ticks risk. If you have a 15-tick range bar, every trade starts out with 20 ticks of risk. Okay. So on the 7-tick range bar, when you have 10 ticks of risk, I move the stop to break even up to 4 ticks in profit. All of this is outlined for you here. If you go to trade rules right here at our website at tradingiq.com, TradingView, TIQ context and trade rules, it's right there, outlined for all of you. No, I lost my DOM. Hang on, get that back. That is this one right here. Now, I'm pretty sure I should add my stop at break even, but maybe not. 10 ticks in risk on every trade. Okay, that's how it starts out with the ES on a 7-tick range. So I'm not really seeing a good target number for the ES on the top side, but I'm not really seeing one on the downside either. So I'm not really seeing a good pullback number. So if we get the push, what we anticipate is that down here in the slingshot, I did it again. Down there in the slingshot, that this green line is going to get all the way up into the overbought area. And when it does, we should have a higher swing in place. We should be above this level right here. And there, 125 is what the charts are showing. 92, 91.75 is what the DOM is showing. So this should be an okay trade right here. It should work on it right. The YM gave a trade here that I missed. The NQ is still working things out. It should have put in a higher swing here, but it didn't. All right, now we need 4 ticks. There's 3, there's 4. Stop to break even on the ES. Now they get all the way up here to 94. Okay, I'm locking 2 ticks on this. It should go all the way up to 94. If we get up to 94, that would be 18 ticks if it gets up there. Okay, locking in 4, and I'm out with 4. And there's one more ES. Okay, 94 is what I'm thinking on that. So let me draw it there for you. Okay, 94 is right there. That's what that should get up to. All right, the gold is about to give us a trigger on the downside. It's going to pull this out of the overbought right here on the gold. All right, now if you look at the downside on the gold, you'd be looking at the swing low for a potential profit target of 1.8. And the DOM is not really giving us anything to help with that. So we don't really have anything to go on with that right there. The ES did put in a higher swing, so it could give another trade right here. The NQ is also going to trigger right in here. And the NQ is working off of a higher swing, so that's okay. And the ES too. The YM also. So they're all triggering here and here. I'm trying to bring them all over. Stop to +4 on the ES. Stop to plus, I don't know what that is. 12 on the NQ. Stop to +6 on the ES. I think that was 12 on the NQ, and I have the YM going too. Stop to +4 on that. 6 on the ES, 4 on the YM, and I don't remember what I got on the NQ. But they all just triggered at the same time. Okay. Oops, I drag that down. That was 4 on the YM, 6 on the ES, and wasn't it 12? Did you guys catch that on the NQ? It was here. Or was it over here? It was one of these. Either one of those was a valid trade. 12. Thanks, Michael. Okay, so the NQ was 12. 28. And 6 on the ES, right? And 4 on the YM. Okay, and it is now 1:17, so I have 13 minutes left. Wow, and I missed the gold again. I knew the gold was going to be coming, and I missed it. Hopefully you guys got the gold trade. But I missed it. The gold trade was... I was looking for the down close. It came right there. I told you guys about it. It did put it in the swing low. I even told you where it was going to go. Are you sure I didn't put that on? Yeah, I don't have that on. I didn't put the gold trade on. Dang. All right, well, it is what it is. All right, so we got higher swings on all 3 of these markets. Now, the NQ actually just gave a couple of trades in here that I didn't look at. The ES and the YM are both in a position to possibly give us a long trade. This, if it closes down, it's going to disqualify everything. I think there's a chance right here on the YM to give us a trade. And see if the red right here gets down into the black line, then there's going to be no more bullish arrows, right? Like that right there, no more bullish arrows. And the S is probably going to do the same thing. And it sounded like something just dinged. Yeah. Okay. So now there's no trades right now. All right. All right. So in here, you guys in the live chat, in the TradingView live stream, nobody's asking for any ticker symbols or anything like that. If you want to look at over there, if you want to look at any stocks, you want to look at any crypto, you want to look at any forex, anything like that, just type in what you want to see. Hopefully, you guys, like bull bear. Hopefully, you're seeing the charts again now, right? And Bill, DF, you guys hopefully are all over there seeing the charts again. Right. Yes, if any of you guys lose your connection or you lose the charts, just refresh your browser. Right. Apparently it's kind of a touchy thing. We've already lost it twice, it seems like. All right, over here on the gold right now, this out of the ribbon right now would be an opportunity to go short. We just have a little bit lower swing. Let's go high at 31.6. So in this case, I would be selling, 30.8. 30.8 like this, okay, on the gold. Now that's not going to give you an arrow because this is not overbought, but it's a trade out of the ribbon right there. It should trigger me in right now. Okay, now I just only got in there twice. That's okay. So stop to break even after 4 ticks. Needs to go one more tick. There it is. Stop to break even on both of those. And now stop to +3. And now somebody just messed up this connection too. Okay. I don't know how that's happening, but here we go. Hang on. I just messed something up. I was at +3 on the gold. And let me go and find that. I think it just took me out with +3. It did. Okay. I don't know how that keeps happening. But 1 gold +3. All right, so we're still going. We're still going on the live stream, it looks like. And over here on the gold, we picked up 3 ticks on this. Or I didn't just lose my connection. I would have had something better there. All right. So right now, the long-term direction is getting bearish here on the NQ. It's still flat on the Dow and the ES. So we're not going to do anything with that. On the gold, we want to put in a lower swing right here. We want to put in the lower swing before we take another trade. So we're just watching. We have 9 more minutes in here. So we've had plenty of opportunity. I know we did lose the video there for a couple of seconds, like a minute or two, before we figured out kind of how to get it going again. As we work through all these things that we're having here, these little issues that we're having here, figuring out how to correct them quickly, we'll get better at that. As long as the whole thing doesn't shut off like it did a couple times in the beginning, where it just completely disconnects. All right. So we don't have any trades right here. I'm going to wait. So far in this session, we've had 1, 2, 3, 4, 5, 6, 7, 8 trades. And we're +28 on the NQ, +11 on the ES, +20 on the YM. Actually, +24 on the YM, +3 on gold so far. Okay, everything flat right here, so we're not going to do anything. Gold, I want to see a lower swing before we take another trade. And this is flat, this is flat, this is flat. Look at the long-term direction. You see up here, the long-term direction is just flat. Just want to stay away from that. On this, we didn't put in a lower swing here, so you're not even considering taking another short on the downside. Okay, another trade on the downside, I mean. Okay. Good, thanks guys for verifying that everything is good. Sadly, we're running out of time again, but it happens. It does happen. It's like it needs like the first 10 minutes to get itself worked out. And I can't start it 10 minutes early. I suppose I could say I'm going to start it at 12:50 every day. But the problem always seems to happen in the first 10 minutes. All right, so you see the long-term direction is flat. It's starting to get a little bullish here on the NQ, but I don't really trust that yet. It's starting to get a little bullish here on the YM, but again, I want to see it put in some higher swings here. All right, I want to see it get up above right here on the ES, above 96.75. The NQ is just dangerously sideways. We are putting in lower swings over here on the gold, so if it did pull back and give us an opportunity, that'd be all right. If it did pull back and give us an opportunity there, it'd be okay to take. All right, so the NQ is pulling back down right here. The NQ is pulling back down. We're not gonna have anything there. We're not gonna have anything here. We're not gonna, the YM is the closest thing to a trade right now. This hasn't gone oversold, but we're in the ribbon, so we just need the up close on the YM. Okay. We do need the up close. There's the up close. So that is actually a trade on the YM. I got in a little early on that. I'm thinking it was given the up close already. So throwing my stop at break even on that, and +2 on that in case I get slippage on the pullback if it pulls back. It should get up here. All right, it should get up here to 852 at least right there. Okay, I'm looking 10 on that. It should go through 852, through it, but it didn't do that yet. Okay, so that was right here. And I want to see the NQ and the ES put in higher swings before we take any trades there. See, nothing's really triggering. This is black in the green right here. You could have taken this up close if you wanted to, but we're really, the long-term trend is flat, so I'm not going to do anything with that. Here you can see the long-term trend has been bullish for a few bars, about 10 bars. Here it's only been bullish for about 5. So I'm going to hold off on that. On the gold, you see we did put in a lower swing. We need that to pull up and hit the ribbon and give us a down close, or for this to get in the overbought section and then give us a down close there as well. Either one would work. Okay. Now, this is far enough up and we're in the ribbon. Remember what I said, I say every day, the highest probability trade is going to be the ones with an arrow out of the ribbon. If we get a down close on this and it pulls this out of the overbought, that will give us an arrow out of the ribbon. Right, the high of this bar is 29.7. You can sell 28.9, 28.9, like that. Right, being proactive, you can sell 28.9 on the down close here. Now that number's gone up some. 29.9, so you're looking at 29.1, and now 30.2 minus 8. It's right there. Now we're getting almost out of the range of having a trade here on the gold. 30.3 minus 8 is going to put us right there at 29.5. Okay, if this bar ends up closing up and that green hits the black, we're not going to get any trade. But what we're really looking for is for the white to drop down out of here. Now, if the green gets up here into the overbought and then they both drop down, it's going to be a red arrow instead of a black arrow. Okay. All right, so there's the down close. I'm just going to short right there. That close it Oh, I'm sorry. That was a mistake. That was a mistake. For some reason, I looked at that and I thought it was a red arrow, but it's not a red arrow. It didn't give us anything because the green did get up into the black, so that's a mistake. I'm sorry. I put that on by accident. I'm just going to leave it at 10 ticks and write it out. That was a mistake, though. I'm probably going to stop out on this. It seems like whenever I make a mistake, I stop out. And I did. That was a mistake. Sorry about that one. I was looking at the bar color and I thought it was a red arrow, and not totally threw me. But anyway, I stopped out on that one. Now you may say, why didn't you just get out of it when you saw it was a mistake? Good question. But now -7 on the gold on this session, and it's 128. So I don't know if we're going to get another trade. We're probably not going to get another trade to get out of the gold. If I would have gotten any one of these in here that were really good, that one or that one, and hung on to it. And if I didn't lose my connection on this, then that would have been good too. But it is what it is. These are the hazards of trading. But every mistake I made today, I ended up paying for. It cost me a lot on the ES. I made 4 of them on the ES. So that's $500 a contract. It cost me on the ES. I don't normally make that many mistakes in a day. We all do. All right, so over here on the NQ, we did put in the higher swing. Same thing on the ES. So the NQ's got a little bit of a long trade going right there. Excuse me. And the ES does not. The ES is not even close to a trade. Okay. The NQ, it went from here and it ran up already to where you should have had you stop at break even if you got into it. So I was a little late looking over there at that one. The ES does not have a trade even close. It's got to get down into the ribbon to have one without an arrow, and it's got to get down into the oversold to have one with an arrow. So neither one of those things seem to be happening right now. Okay, and now the ES is down here. But now everything else is dropping too. So I'm not so sure this is a great trade here. If we get an up close, it'll be a ribbon trade on the ES. Okay, we didn't get the up close, we got the down close, and now it's gonna be questionable. If the green stays in the black, no, it'll actually give us an arrow too if we get the up close now on the ES. And there it is, the up close on the ES now. And I don't see where it's going to try to go to on the upside. No, I don't really see in the DOM. I don't see any good place for that to go to on the upside. In the chart, it should get up here to 98.5. That's what it should do. You know, if we were drawing trend lines across the bottoms, this is a pretty decent bottom for it to have right here. So it should push up. The NQ is going completely sideways here. If that's leading the ES anywhere, then it's not gonna go up. It's gonna go down. And yeah, it's all a mess in here. See now, there was no arrow in here because this was not oversold. And we finally got the up close. Right. I was getting something about. Let me look at one thing here. Put the no trade zone on there. I think we're in a no trade zone right there. Yep, we are in a no trade zone right there. That's why you don't have an arrow. And over here on the gold, there was a trade right here I'm not in. If that trade is going to move up, it should go up here to 932. And there is some indication that it's going to go up. 932 has got a decent number at it. It could go right up to 932 right now. I'm not in this, but it could go right up to 932. Right there. Okay, and there it goes. It is going up there. That's a good thing. All right, so what time is it? It's 1:32. Guys, I got to wrap this up. I didn't realize that. All right, so if you've not taken a free trial with us and you want to take a free trial with us, go to mytradingiq.com, sign up for the free trial there. Nobody, again, asks to look at anything other than futures. You know, we can look at anything you want. Like you want to look at, let's go over right here. Excuse me, I got a cough. Let's go over here and look at like Apple. I have no idea what Apple is doing today, but we can look at Apple and we'll put it on the 100 range, which means every bar is $1. Okay. All right. Apple is not a great thing to do anything with today. Look at that mess. Let's blow it up so you can see the whole thing. There's another trade right Let's blow it up so we can see the whole thing. Look, that was a bunch of garbage today in Apple. Yeah, there was really nothing today. Okay, let's look at something else. Let's look at Tesla. Okay, so Tesla's given a short right here. It gave one earlier. Over here. Got really choppy in here where there was nothing. Had this was yesterday, but in here it's suggesting a short right now. And if it does short, it should go down here to 176. That's what Tesla's suggesting. If we look at this on a larger time frame, then what you're looking for on a larger time frame is for price to get up above the BBC, which is the leading line in the ribbon, and pull back down to it and then bounce off it. That's typically what happens, like right in here. Pulls away, comes up, hits it, bounces off, pulls away, comes up, hits it, bounces off, pulls away, comes up, hits it, bounces off. That's typically what you're going to see. So right now it's actually crossing down below it on a larger time frame. So here on the 100 range, it should really push down to here and then probably even more down to here or here as you know, as the world continues to unravel. But that's Tesla. I don't know if anybody wants to look at anything else, but I'm going to wrap it up because I am now 4 minutes over my 1:30 time slot. So we'll go back to futures. Here's that, and we did end up in a few minutes here. We weren't able to do anything because of some more technical glitches. But we are going to wrap it up. If you have not taken a free trial with us and you want to, go to mytradingiq.com, sign up for the trial there. You can use the stuff on whatever you want. We'll teach you how to use it. Well, we'll show it to you again and again on futures, but I will teach you how to use it on anything that you want. You know, if you want to use, it on, if you want to use it in larger time frames, you know, Dwayne will go with larger time frames with you. He's going to come back on in a few minutes, but the shorter time frames and stuff like I do, the day trading, whether you're day trading futures, equities, ETFs, you know, forex, crypto, whatever it is, you can use this with it. Okay, and I hope you're all with that. That's it. With that, I'm going to go back in here and close down the live stream, this time on purpose, and then we'll head back out. There you go, it's closed. We can head back out to fabulous Phoenix, Arizona now. Studio Way, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir.
Excellent.
Recap of the recap from the morning session.
From the morning, 8 minutes, 3 trades, $600.
Good job.
Thank you. Thank you.
All right, guys. To become a lifetime member with no recurring fees, no upsells, no new shiny objects to buy from us ever, go here to eminifuturestrading.com. 2 mouse clicks, you're a member for life. That means you have lifetime access to the live training room, 2 hours every trading day. Access to unlimited one-on-one private mentoring, strategy that we teach you, the indicators that you own for life are fluid across all markets, all time frames. That includes stocks and crypto and forex. As a passport holder, you'll receive the Logic 247 alerts around the clock, concierge trade alerts, and of course you'll be in the Thursday night members only workshop every Thursday night at 8 p.m. Eastern. Plus you'll enjoy around the clock support 24/7 via our many Telegram channels. So with that, let's wrap it up with our good word for the day. Yesterday, we talked about giving. Today, we'll talk about the benefit of giving. Your overflowing cup of blessing. Psalm 23:5. My cup runs over. David said, Yea, though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me. You prepare a table before me in the presence of my enemies. You anoint my head with oil. My cup runs over. Now notice that God didn't promise that you wouldn't have to deal with death, fear, evil, or enemies. He simply said that in spite of them, and sometimes in the midst of them, your cup will still overflow with His blessing. Your God is a God of surplus. Paul writes in 2 Corinthians 9:8, God will generously provide all you need. Then you will always have everything you need and plenty left over to share with others. And in Romans 15:13 we read, Now may the God of hope fill you with all joy and peace as you believe, so that you may overflow with hope by the power of the Holy Spirit. He also provides a surplus of peace. Philippians 4:7. He gives the peace of God, which surpasses all understanding. So when you're struggling to make ends meet or you fear the future, look in the mirror and say, God is my source. I have more than enough. My cup overflows. And don't just do that in times of need or crisis. Make it a habit that you practice every single day. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.